All right, welcome. This deep dive is about the imbalance footprint chart. It's dedicated just to describing in detail what it is, how to set it up. We'll show you some optimal settings, and probably most importantly, some use cases, how you can apply the imbalance footprint to your own trading. And that'll be in the second half of this when we get into the actual software, the Market Delta desktop software. I'll show you. So let's just jump right into it. This is a footprint. It's based on years of our understanding, our own trading experience. It isn't one of the original five. It came about really after we had a lot of experience in reading and looking the footprint, and it became clear there's some additional innovation and ways of making it easier for you to be able to read the data in the footprint. So this one is very unique, and we'll get into that. It really provides an easy way to make use of inside the bar data. So that's really what the footprint is. It's allowing you, the trader, to see inside the bar or see inside the chart and see all the volume at price and order flow at price data. So this one does a very good job of that. It identifies these order flow imbalances and simplifies reading the footprint. So there's an algo. We have an algo that really it's sitting inside the footprint running, looking for this order flow imbalance relationship. And when it happens, it will color code the text on the footprint chart. And that is what makes it, or I should say, simplifies reading the footprint, because it's looking for this important relationship that we know to be important, and it brings it to your attention so that you can then take action at that level, or at least use it as a qualifier for your trading strategy. And next one here, clearly identifies the fuel, which is volume in the market. It's called the imbalance footprint. So what it's doing is looking for that volume imbalance in the market at a particular price or series of prices, and that is the fuel. So what you'll see is these buy imbalances or sell imbalances. These are going to be brought to your attention automatically on screen in real time, which can provide a real edge for your trades. And last but not least, we like to say algos can't hide; they leave a track, and that track is a footprint. A lot of so much in today's discussions and media is just complaining about algos, but we need to learn to live with them. And a trade is a trade, whether it's a person clicking or an algo or computer creating that. And the footprint provides the most granular way of understanding that data and then aggregate in a way that's useful, because that's ultimately what it boils down to, is having useful information that you can act on. So let's jump into I want to break down the methodology and help you understand what goes behind the creation of these imbalance footprints. If you haven't watched what is a footprint video as part of this deep dive, I think it's the first video, that one goes into it some too, but I'm going to go into it a little bit further in this video. So the traditional footprint methodology, what it does is it compares, let me turn on my laser pointer, it compares this bid, this price, the single price, so it's 23.60 half, this price right here, it's 23.60 half. The traditional footprint classification algorithm is looking at just that single price, and as that price is the bid price, it keeps track of the volume that traded when that was the bid price. And then when it becomes the offer price, it keeps track of the volume that traded when it was the offer. And so I call it kind of the inline methodology. It's the traditional classification, but what it is, everything's on a single, it's just looking at a single price, and as that price becomes bid or becomes offered, it classifies the volume that trades at that price as bid traded volume or ask traded volume. And that is how the traditional footprint classification algorithm works. And so it keeps track of it, as you see here. 1610 traded when 60 half was the bid price, and 884 traded when it was the ask price. And more traded when it was the bid, meaning more aggressive selling, hitting of the bid, which is why the background here is red. That's a negative delta. So I kind of went through that a little bit fast, but if you're not sure, you want more understanding of that, go back and watch what is a footprint. I go into that a little more detail in that. But I want to move on to the imbalance methodology because that one is different. And so I want you to see, I wanted you to understand how the original one works, but now we want to move into the how the imbalance one works. But before I do, I want to show you just a DOM. This is a DOM from Market Delta Desktop, and here you have, this is the bid price, 23.59 quarter, and the ask price or the offer is 23.59.50. This is the ask quantity. You got 164 available for sale at that price, and this is the bid quantity. You have 546 available to buy at 9 quarter. All right, and I just have noted here the last trade quantity was a 1, so one contract just traded here at 59 half. Now, why do I show this? Well, I'm showing this because this really is how the imbalance footprint algorithm works. What it does is it's watching the volume that trades at the bid price versus the volume that trades at the ask price. So as this quantity gets chewed into, notice one just traded here, we're going to keep track of that. And if they come back and hit the bid, we're going to keep track of that. So moving on, it'll make sense here. What it does is it's capturing, as they hit the bid, it'll aggregate the volume here, and as they lift the offer or trade into the offer, it'll aggregate the volume here. So it compares this bid, 58 half, against this offer, which would be 58.75, and just continues to tabulate the volume as it trades. Now, I know you see numbers to the left and to the right. Well, that's because the algorithm's always looking at this lower left to upper right relationship. Lower left to upper right. And I show that on this next one. So it compares the bid price to the ask price above. And so I know you don't worry about the numbers that are behind here. Just focus on this orange colored dotted line. That's the relationship. So the imbalance methodology is always doing a comparison between this value here against this value here, and it's looking for the imbalance. And then I'm sure some of you are thinking, what is an imbalance? Well, an imbalance is we allow you to define how much volume creates the imbalance, but let me go back to my previous slide so you can actually see some numbers. What you have here is you have a couple sell imbalances. You have one here at where there was 515. This one here, it's red, that's a sell imbalance, and this one here is a buy imbalance. I'll describe more about that in a moment, but basically the imbalance footprint shades the numbers, the actual number, not the background, the number, either green or red to indicate the dominant side. So in this case, the relationship was 41 versus 681. a significant difference in volume here that met the threshold or the criteria that are defined in settings, which I'll show you. And it was enough to make this a buy imbalance and color coded green. So I like to I use the word when I describe these imbalances, this would be a trigger. You're going to hear that word a couple times in this presentation. And this would be a buy imbalance trigger. These are sell imbalance triggers. And everything else you really don't have to concern yourself with. You're mostly focused uh, on these imbalances, these sell imbalances or these buy imbalances. That's where your attention should be most focused when these occur. Okay, so let's move. I just showed you this. Hopefully it's clear how this methodology works. It's not in line, it's not side to side, it's this diagonal comparison. It'll make more sense once you see it and once you see it in real time. So meaning of imbalance, well, more volume at ask, that would be a buy imbalance. So it's typically green or blue, which would represent aggressive buying. It's what I just showed. So it's when you have that diagonal relationship, right? That's always in place, this diagonal relationship. And when you see more volume at the ask, that's your buy imbalance. And a sell imbalance would be more volume at the bid, and that's going to be red, which would represent more aggressive selling. All right, so let me show you. This is the settings screen that I mentioned just a moment ago. And I'll show you this in the demo. We'll get into it in real time. But the things that I want to bring to your attention here. The style of footprint is imbalance. That's obvious and required. It's the imbalance footprint. And these fields right here, the imbalance percent and min diff, minimum differential, these are only displayed when you're looking at the imbalance footprint. So imbalance percent, this is the percentage difference between that bid traded and that ask traded volume. So when we set it to 400, it's requiring that there be a 400% difference in volume between that bid traded and ask traded. So if I go back to the previous screen, let's go back to here. I forget what it was set on here, but 400 would work. Notice 681 is 400% or more greater than 41, right? It's well beyond that. And same with this, and same with this. That's why these get colored, because it's greater than 400%. All right, and this is configurable. By default, it's 200. So out of the box, it's 200%. We tend to, I'd recommend 400 is a nice number, 500, those are pretty optimal, but you can clearly set it to be whatever you want. The important thing to note, the higher the number, or I should say the larger the number, the less imbalances you'll see, and the lower the number, or the less that this number is, the more imbalances you'll see, which hopefully makes sense. The minimum differential is not a percent, this is actually a volume number. And what this is another way of setting, think of it as a qualifier of volume. The difference needs to be a minimum of 25 contracts in order for this to be applied. And let me use it, the best way is to think of an example. 400%, well, if we had 4 contracts traded in the offer and 1 on the bid, well, that's a 400% difference. However, there's only 3 contracts. It's a very little, in terms of actual volume, it's a very small number, and we well, we or you may not want to see an imbalance when there's only that little of volume. So by setting a minimum differential of 25 or 50 or 100 or whatever you want it to be, you're basically requiring that a certain amount of volume has to trade before the imbalance percent actually becomes applicable. So it's a way to um, basically set a criteria to require a good amount of volume to occur before this kicks in. And I'll show you some real examples of that. But this is very important. This is, well, it tends to be a power user setting. I say that in other webinars and videos and stuff, but more and more it's pretty critical you set this, especially with some new functionality that we've recently added, which I'll touch on near the end. Um, All right, so let's take another look at meaning of imbalance. Here you can see, I've already pointed these out on the other slide, but this is where you had, these are sell imbalances. Sell imbalances are going to be red. Buy imbalances are going to be green or blue. Typically, those are the colors people use. But hopefully you're understanding it's this relationship right here. It's when you've got a sizable difference that traded on the bid versus the offer, and we call that a sell imbalance. And what you're going to see here is you're going to see instances where you see these back to back or back to back to back. You'll see clusters of them. So those are shows a lot of impetus at a particular level on the part of sellers or buyers. Okay, let's move on. All right, so methods of applying footprints. Footprints are a chart, not a system. I can't say that enough. If you're brand new to market delta and the footprints, it might be tempting to look at what I've just described as a system, but it's not. The footprint is a chart type, just like you might have bars or candles or point and figure, whatever you may look at. Think of the footprints as a chart. However, because there's so much data contained with them, they're ripe, they're rich with data. Um, we obviously amplify that in the form of the imbalance footprint to give you more context to what you're seeing occur within the bar. And so, while it may seem like a system at times, it's not. It's really a way of magnifying the information that you have to help you make a better decision, but it still is a chart. And all your traditional indicators can be applied, and support and resistance and all that. But I want to make that distinction, because sometimes people come to it thinking it's just this red light, green light, and it isn't. There's still some interpretation and discretion used. So some of the ways you're going to apply this, and I'll show some examples here, but you're going to use it with traditional methods for confirmation and precision. So let's just use like support resistance levels. Everybody, well, I don't want to say everybody, but most people have an idea of where they want to trade. They've gotten some levels written out. They've got some indicators or studies, whatever, and they're really looking for a way to help fine tune those entries and exits at those levels. That is a very perfect combination of footprints and what you already do. It's a great way of implementing it, especially when you're brand new. As you become more advanced and more experienced with the footprints, you're going to then start to see unique patterns of the footprints themselves that you can start to leverage. But initially, confirmation and precision is a great way to use it. Spot reversals in order flow. So you're going to see some examples of that, because the footprint, because it allows you to see inside the chart or see inside the bar, you actually get to see this stuff happen in real time within the bar. You can look at it on a bar by bar basis, but you can also look at it within the bar. And that again becomes extremely important at your levels, support, resistance, or whatever, because now you have this added order flow component, and you'll see. It's like when I like to use the ocean in multiple analogies, and you're going to hear another one in a little bit. But when a wave rolls into the shore, rolls into the beach, well, the momentum is in, it's coming in, but then it kind of runs out of energy and then it pulls back. Well, think of that as order flow. It's an ebb and flow. And you, as a trader, if you can not just witness price move, but also try to have a feel and understanding of order flow coming in and leaving the market, you all of a sudden you have a much better understanding of what's going on, and that can help with your positioning and direction of your trades. Monitor strength of a trend. I'll show you some examples of that. But bottom line is, because you're able to see inside the bar and see these imbalances, it helps you monitor the true strength, the true flow of the trend. And that's extremely important, because up until now, you've probably just traded based off price, strength of prices. Well, price is stronger when it's going up and price is weaker when it's going down. But you really don't have, or you probably haven't had the understanding of what's driving that. Or if you say you get long and the market starts to move up, a lot of times doubt enters your mind. Not just you, but everybody, every trader. It's like, well, is this thing going to come back, take me out, and then go higher? You want to be able to try to understand, if you're long, are the buyers really in charge? Are they continuing to drive this thing higher and in your favor? And when do the buyers start to pull back and you start to see sellers enter aggressively? That might be where you get out. And so that's where monitoring the strength of the trend with this can be very helpful. Unique footprint patterns and strategies. I touched on that right up at the top on the first point, I think. But as you do get experience with it, you will see unique patterns and strategies that you're going to develop off those patterns from the footprint. And the reason is you have intra-bar information. You're able to see inside the chart. And that is just it's like a 3D view of the market. You're going to have more things to base decisions on, and it only takes a little edge. Every trader just needs a little bit of an edge. See something a little different, do something a little different that can make a big difference in their trading. And so that's really one of the big draws to the footprint, because you're now looking at things that 99.9% of the world doesn't even have a clue exists. And all you need to do is extract some value from that in order to gain your edge. And then I like to say many other ways, what can you come up with? We don't claim to know every single way that you're going to apply this, but approach it with an open mind and apply it to the markets you have. And I can rest assured that you're going to find something that's going to work for you. All right, so let's jump into a couple examples, and that would be reversals. So we're going to look at reversals, trends, and then real-time support and resistance. But reversals, typically you're going to use this volume imbalance to qualify trades at reversal levels. So the imbalances act like triggers, which makes it easy to identify shifts in order flow, or I should say easier. And it's because as the market approaches, let's say you got a resistance level up above where we're currently trading. When the market trades up to that level or around that level, and you see a sell imbalance come in, you see it literally light up in real time on the current bar, that is a trigger. That's a sell trigger. And so that can really help you identify market reversals at key levels. So you want to watch for these imbalance color shifts, as I call them, or triggers at your support and resistance levels. And I don't mean to make that sound overly simple, but that is what that's what you're looking for, and that's why the imbalance footprint is so nice, because it just automatically shows you when these sell imbalances or these buy imbalances happen. So you're not trying to, there's not so much interpretation. It's more, oh, there's my trigger. And at that point, you do have to make a decision of do you want to trade or not. But you'll find there's going to be times this will help you get in trades, and other times it's going to help you not get in trades, meaning it'll keep you out of trades that you probably shouldn't be getting into to begin with. So let's look at a quick example. This was the 10-year note, 10-year note futures, and I had some a resistance level and I had a support level on the chart, and it just so happened that the market rotated. Well, here we're looking over here on the left, came up, tested it, pulled back a little bit, and retested. This is the perfect setup. This is nice because first time up, um, well, we didn't get any sell imbalance, right? You don't see any sell imbalance like you did here. You see these red numbers? I know they're hard to probably read on this screen, but point is these red values, these red numbers, those are the sell imbalances that we're looking for. And so you get a test, pull back, retest, with a little, just took it out, but look at how much volume. This is another benefit of the footprint, which I'm not getting into too much, but notice only 53 contracts traded up here through my resistance level. Didn't have to sweat it out too much, but we get these sell imbalances. I get 2 of them within this bar. That's nice. 1 is good, 2 is better, 3 is great. But it shows you rejection at this level. That's what it tells me. Now, it doesn't mean that the market's going to rotate all the way back down. I don't know that. I didn't know that. But it does give me the ability to see there's some rejection in the near term at this level. And if I was long, I could get out. I could exit up in here. Or if I was looking to get short against my resistance, I would. So, and look here, it actually opened, the next bar opened with another sell imbalance. So that's just a great pattern here, a great pattern. Market auction down here, and down to our support. And what do we get? Right here, see this buy imbalance? We get one here, 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 and it really started to bottom out here. That's what we were seeing. But as it pierced into my support level, this is what I want to see. Market bounced, and again, depends on what you're playing for. You never know how much is whether the reversal is like the low of the day or the high of the day. But the whole idea is to give you help on the timing of your trades. It's not telling you how far it's going to go, but it is definitely helping you on the timing of the trades. I don't want to make too big a deal about this one, except that it was another buy imbalance. But this one here is the big one. And you might say, why? Well, here's why. We get another buy imbalance, but look at the volume that traded down here. Not just at this price, but even the price above it. We get some big volume that came in right here on the retest. That's the point, the retest. It did not take the level out. So this is a nice signal. Okay, so hopefully that provides some insight into what we're looking for. But it also underscores having some levels that you're trading against. I mean, you could purely trade off this, but I'm not advocating that, especially if you're brand new to the footprint. You're going to be much better suited having some levels on your chart and then using this to accompany those levels to qualify your trades. That's a really good way of going about it. All right, so the next chart here, this is another reversal market. Notice it was auctioning up. Now this is not an imbalance footprint. This is a bid-ask footprint. So I probably shouldn't be in this presentation, but it is. And what I wanted to show here is not so much any imbalance triggers that we're looking for, although they may have been present. But I want to show you another way to help qualify, and it has to do with the delta for the bar. So down here I have it's the volume study added, and it's set to delta. And this is a great way to confirm the reversals as well, because what you got is you got a new high. It's actually traded the high of the day here. It closed on its low. We got quite a bit of selling in here. Notice what the footprints look like, the background of the footprints with negative delta. So that's what I wanted to, that's what I'm pointing out on this. It's a little bit of a digression from what we've been discussing, but it's helpful because you can add this same study to your imbalance footprint, and it's another way to qualify the entire bar, not just a particular imbalance price or an imbalance trigger. Okay, so I would encourage you to couple this. This is the volume study with set to delta. All right, so those were a couple reversals. Let's look at a trend and how the imbalance footprint can be helpful in a trend. So some of the things we want to look for, I just say follow the imbalances, stick with the dominant order flow. And you're going to see some examples of that. You want to identify the trend and you want to ride it, right? So the trend is your friend. We've all probably heard that. So we want to identify that and then be able to maximize if we're on that trend. If we're long or short that trend, we want to be able to maximize our profit opportunity, and you can do so with watching these imbalances take place. So we want to look for a reversal of trend to lighten up your position. So you'll start to see, if you're in a trending market, these imbalances start to come in counter the direction of the trend. That's where you start to think to lighten up on your position. Let the imbalance keep you on the right side of the market. It is dangerous to fade, right? I mean, everybody's had a trade that's probably gone against them longer than it should have. And this will help you identify when that's happening, and hopefully get you in the right side or get you out of a bad trade sooner. So here's this is the S&P E-mini. It's a 4-tick reversal chart. I'm not going to get into that too much. It's more a matter of, I just want to let you know what we're looking at. And this thing just was really auctioning down. This is about a from high to low here, about a 14 handle or 14 point rotation down. But so many times traders get in a trade and they don't get much out of it. And that's what we're trying to do here, is help you be able to understand when you got a good trade and how to stick with it. So let's say you got short somewhere, let's say right in here, right at the break of here. I'm just picking this arbitrarily. What keeps you in the trade? I mean, do you just have a profit target of 2 points, 1 point, whatever? Or can you let this help you read the market and know when to get in or get out or stay in? And if you're short up in here, notice what you see. This is, remember, we're looking at a market that turned out to be a trend. You see red, 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 and then look at, right? See all these sell imbalances? That really is telling you the trend is your friend. If you're short, you are on the right side. Obviously, price is moving in your direction, but so is order flow. The volume imbalance is moving in your favor, and that is what you want. That's confirming the order flow is in the direction of price, and it's strong. So it's actually printing these imbalances. Because remember, to print an imbalance requires a certain threshold. Remember the 400% we talked about? I forget what this one was set to. But the point is, when you see these light up in color, you know that it's of a certain significance because it's achieving that percentage. Now, let's look at this one right here. You know, you got this 13, 16. You got a buy imbalance right here. Well, you could use that as a a way to just simply exit, but I don't want you to be too spooky and just get a single one of these and you totally jump out of the trade. You gotta um, get a feel for these things, and you may lighten up based on that, but what you do is watch the next bar and see what it does. The important thing I'll point out on this one is it really couldn't even retrace back through mid part of the bar, and we get another sell imbalance. Another one opens. It continued lower. Started to balance here, right? Started to balance. And notice I've got that delta down here. This is great on these trends. It'll help you really step back from the individual prints and look at it on a bar by bar basis. And I usually tell people one single positive delta that's not enough to take me out of a trade. It puts me on guard, but then I start to look inside the bar for dynamics in terms of retracement, in terms of imbalances. So this I was fine here. Get down to here. This one is where you start definitely got a question because you got a buy imbalance. Now we got a positive delta, and it's like, oh boy, is it going to start to rotate back up? So there's caution based on what you're seeing here. However, you can see what happened, right? And then right here. So unfortunately, I don't have what happened beyond this, but here's what I want to point out. And this is something I really like on the imbalance footprint is when the market hits a point all the time in every move up and every move down where you get kind of traders throwing in the towel, so to speak, or capitulation or exhaustion, however you want to think of it. What this is showing me is it's showing me where the intensity of selling picks up to a level where the bottom might be getting put in. And I don't know if that was the case here, but I can definitely see that when I see this many, 5, and then I see them clustered together, this is telling me that the end may be near for this trend. Okay, so when you see this type of clustering at the end of a move, then that's very important because that tells me the end might be near. If I see this kicking off a move, meaning say we're at the highs and I see a pattern like this, 3 sell imbalances, that could be initiative of a move, the start of a move. Hopefully that makes sense. So it does matter where you see these types of patterns. And we can see we've had a big move down, 14 handles, and we get this type of capitulation. All right, let me move on here. Delta momentum. This is simply using the volume study set to delta momentum. It's one of the parameters that you'll see. This is another great way that you can set it up. It helps you understand the trend and momentum of the trend. I'm not going to get too much into delta momentum except to point this out. It's a great one to have on your chart and will help you ride the trend longer because you can see it stayed negative despite some of the these pauses. It kept you in it and allows you to extract hopefully more value in the trade. All right. Now this one, real-time support and resistance. This is something that is actually covered in some further deep dive videos with Anthony. I'm just scratching the surface and whetting your appetite. So I'm not going to go into super deep details here, but I do want to show you some things. And it does directly relate to the imbalance footprint, which is why I wanted to bring it to your attention because this is a major benefit of the imbalance. So some of the things you want to look for, and I'll show you on some charts, but are first touches. These real-time support and resistance that get these zones, we call them easy zones, edge zones. This is real-time support and resistance. When they kick out and you see these easy zones, the first touch is always very important because it's near-term support and resistance. And then what I call multiple levels where we have these zones where they're back to back or back to back to back. kind of clustering, put more weight on those when I see that. So let's get into, I'm going to show you a few screenshots, and then we'll jump into the actual demo. So here is an S&P set to the S&P E-mini set to a 1 by 4, meaning 4 tick reversal, and these are these easy zones that are drawn out. And again, I'm not going to get into the details of these because Anthony does in another deep dive. But what I want you to see is these zones automatically, they're configured in the software, and that's what Anthony will be covering. These things automatically draw based on these imbalances, and there's some settings in there. So the cool thing is when these things as these imbalances develop, because they do provide near-term support and resistance in a real-time manner, they'll draw across until they're pierced, until they're taken out. And then they obviously stop drawing, which you see here. So they can provide levels of pullback and provide you near-term support and resistance. So that is a very nice thing to automatically have support and resistance levels drawn. And you can dial these in so you see less of these, so that the ones you see are of more significance or importance, or you can have it where there's certainly more of them. Again, much more on this in some future deep dives that Anthony's doing, so check those out. Here's one on crude oil. I just want to show a different market. This is crude oil. And remember I said burst touch, and then I said multiple levels. Here's what I mean by multiple levels, where you get back to back. So this was a market that rolled over, sold off down to here. And these levels are these are coming from, who knows? I mean, back several bars ago. I can't see them here in the chart, but they're drawing, and you can see it held not once but twice. And then look here, see this buy imbalance right here? See this green right above the laser? This would be your trigger. This is a buy trigger. So while you didn't get one here, this may have been a profit taking level, and then it rolls over, retests. This could be, if you're looking now to get long based on this, this is your trigger. See the buy imbalance. And it was a nice pop. You got 35 cent move away from that level. All right. And I think I had one more. Nope, I don't. So let's jump into the application. Okay, so now we're in Market Delta Desktop, and the market actually just opened here about 20 minutes ago. So this will be a good example to see this thing in real time. But I'm focused on the imbalance footprint, not so much calling out trades, but I will point out some things. But this is the S&P, and I got it set to a 4-tick reversal. The market just closed. This is where it opened today, right up in here, and it's been trading higher. I just want to point that out so you know what you're looking at. But I'm going to right click on the footprint. I'm going to talk through how these settings work. I want you to see and understand it. You can see it's set to an imbalance footprint. The source is the time frame of the chart, or the interval. So I have it set to a point and figure. If I chose bar, that would be a time-based bar. But I'm going to leave it on what I have. I just want to point that out. So imbalance, I have my imbalance percent set to 400%. And I have my minimum differential set to 400. Now, out of the box, that's the minimum diff is 25. I would recommend, at least for the S&P, increasing that. And I've kind of found a good rule of thumb to be whatever my imbalance is what I set my min diff for. That is a very general rule of thumb, but it's a good place to start. So if you're looking, if I reduce that, I'm going to reduce it to 25. If I hit apply, you're going to probably see some more imbalances show up. Let's see. I don't know if there might have been a few that showed up. I think one showed up here. So let's watch that 91 there. If I set this back up to 400, and hit apply, you can see how the 91 isn't now part of it, because I'm requiring that the difference in volume between 7 and 91 be 400. And once that's in place, then I just need it to be a 400% difference between those values. So that's, hopefully that makes sense now. You got to see it on the PowerPoint. You see how it is in real time. If I set this down to 200, remember, the lower you go here, the more imbalances you're going to see. So watch, you'll probably see some more show up when I hit apply. Yeah, you see some show up. There's one here, I think, here. I saw, I think, some here. So watch, if I go back up to 400, I guess maybe watch right up in here and you'll see that go away. See how those cleared up. So it's not that one's better than the other. I just want you to know how to dial this in, because some people are going to want to see more imbalances and others are going to want to see less, but put more weight or value the ones that they see greater. So this is not a bad start right here. Anthony's using 400 or 500%, I believe. Not sure what he uses on the MinDiff, but anyway, you can. I want you to understand that. All right, so here we are pushing into new highs. You see these buy imbalances. So there's some impetus here occurring. Notice how this sell imbalance and this sell imbalance, when it entered, what did it do? Well, it at least capped the move in the near term. When you got the market, it auctioned up. It did stop the move up, and the market pulled back a little bit. Now, yes, I know it didn't pull back much, but it was a pause. It was a pause signal, right? Same here. The market, it stopped it. Now, normally this is what I like to see. New high, pull back, retest with a trigger. But we didn't see any selling here. No sell imbalances came in here. And consequently, the buyers have resumed control. All right, but I really want to get through these settings. That's what I want to show. This is where you would control well, let's see, the sell. So you could see my reds and greens. If I wanted to change that red to, oh, I don't know, let's say this dark red, which I'm not, I'll change it back, but you can see now that's really hard to read. So that's how you can change these colors. Let's see. Well, that's, for the most part, you're not going to mess with these colors too much. I want to show you something though, probably the most popular. Highlight it. If you go into here and add POC, and I'm going to change it to yellow or kind of gold. If I hit apply, you see the yellow or gold colored box on each. There's only one in each cell. That is the point of control or the high volume level within the bar. This is a very nice thing to have on the chart because it's showing you migration of volume. Is more and more volume coming in at higher and higher prices or lower and lower prices. So this is that's how you would add that. Okay. I'm gonna go ahead and I'll just leave that on and hit OK. Now let's just jump to a different market. I'm going to jump over to crude oil. I got crude oil here. This is today. It's heading higher. And then I got the Bund right here. Let's go ahead and look at this. This is a European 10-year bond. And this is a very popular instrument. Trades a lot of volume, good liquidity. And let's just go ahead and take a look at this. Now this one I have the those real-time support and resistance or the easy zones on it. I just want to show you how to turn that on real quick. Again, Anthony's got a whole nother deep dive video that goes into this at a much deeper level. But I want to show you how to add this because it's part of this imbalance footprint. Right click on the footprint, the actual footprint, choose modify FP, and you'll go to highlight it. Right, this is where we just were. And what you want to do is choose buy imbalance and sell imbalance, choose them both one at a time and just add them. So I'm not, I'll just show you. You just do that. And there I just added them a second time, which I'm going to remove them because I've already got them. But they're going to add, and pretty much all you want to do, this is the threshold that I've already described. This is a percentage. So I got them set to actually 500%, not 400, but 500. And I've got it set my min diff to 500. Again, this you'll dial this in. You'll want to play with that and get it to a level you feel you're getting the right amount of levels. I don't like to see too many levels, but I don't want to see where I don't want to have it where I never see them either. So dial that in. And Anthony, the trading room, they'll have some good recommendations for that. You can also email us if you have some questions. And if I have it set to draw the band, but if I want it just to be a hollow line, you can see it draws a hollow box around the price and just draws a line. Some may like that. That's all that means. Shades is just, I have it set to a single shade, but you can actually have it where maybe I've got 3 shades, giving me an idea of the level of imbalance. So Anthony will be getting into that. I just kind of default mine to 1 because really I just want to know the level. I view it usually as a short-term level, and I just want to see when that happens. You can dial up the opacity if you need to so that you can see through them if you need to. So I could back that, back it off. That'll help. And other than that, the look back, this is important because, well, you don't have to have them extend, right? So if I uncheck that, notice it just color codes it. It doesn't draw the zone. And I think most of you guys will probably want to view it as these zones, not just highlight it. So to draw it, just to do the extend, and then the look back is how many bars it looks back. So I have it set to look back 1,000 bars is how far these lines will essentially draw going back in time. So, which is fine. That's I think out of the box it's 250. Set it to whatever you want. But 1,000 I like. A lot of it will depend on your time frame of your chart. Now this is a 15-minute chart, so 1,000 15-minute bars is a lot. But if I was on a 1-minute chart, here's a 1-minute chart, it's going to take 1,000 1-minute bars. That's what I'd be viewing, and you can scroll around and view your levels. See, there's not too many. It just isn't too many. Okay, so that's really what I wanted to cover today with the on this deep dive, is really give you an idea of a very good idea of the imbalance footprint and some ways to start putting it to use. So continue to watch all the other deep dives. There's definitely this footprint, you'll see it referenced probably throughout most of the other videos. And let us know if you have questions. Market Delta Desktop is the product I was showing this on, and we're happy to provide a 14-day trial of that product if you would like to test out some of these things. All right, thanks everybody, and make a great day.